So I will touch on Miami and Latin America at the end, but I want to frame the conversation about how seeing tech hubs in different markets that we operate. So Whitestar used to be our personal super angel investment vehicle, which we created a fund on top of. Last year, started deploying across London and New York, which are two hubs. We invested in East Coast and West Coast of the US, London, Berlin, Sweden, Portugal. And so we get pretty actively involved in the local ecosystems. And what I've tried to consolidate is my view on the building blocks, if you will, that are required to have a dynamic tech ecosystem. And so my first premise, and I think all the panelists that were just here agree with this, entrepreneurship is now global. You can literally build a world-class company from anywhere in the world. And my favorite example is Flappy Birds, right? One guy in Vietnam kind of codes this app, puts it on the app store, it goes global distribution, 50 million downloads to the point where the guy freaks out and takes it down after making significant amount of money. One guy in Vietnam effectively becomes the #1 app on the app store for games. It's still amazingly impossible. I think I've only gone to level 5 or 6. And so if that one guy in Vietnam can be multiplied by millions around the world with platforms like Facebook and iOS and Android that give you global distribution and monetization, entrepreneurs can really exist anywhere. But what actually is needed around the entrepreneur and the idea to make a tech hub, a tech ecosystem truly happen? And I think you could actually stack up the blocks one by one. It starts with the supply of talent. But supply of talent has to have culture and role models for them to try and emulate, along with launch platforms and government support for entrepreneurship to actually thrive. Then you have the brilliant idea, you need early stage fundraising and support, be that angels or early stage seed funds, for you to actually have that money to scale out and launch. So you've hit it, you're actually growing, you need money. Who do you turn to? What is the source of actually growth funding? And I think in Latin America there's definitely an issue with that, as there is in Europe today. Who leads your Series B round when you need $10, $20 million? And finally, the exit market. But the exit market is important not only for liquidity for the investors, but actually to feed the whole ecosystem. If there's actually active exit markets, that creates role models. If there's actually active exit markets, that leads LPs to want to invest in funds. If there's active exit markets, that actually leads to people, employee 100 at Google, who definitely did pretty well, to then become either an entrepreneur or an angel or go create a VC fund, like Felicis, for example. So you need all these pieces together to actually have a truly vibrant hub. So let me walk through each of the building blocks, and I'll bring it back together and talk about what might or might not be there, specifically in Miami at the end. So first of all, supply of talent, right? We're talking about software eating the world. We're talking about people that can actually build software. This maps the number of outputs, so the size of the circle is number, and then percentage of engineering and science graduates by country. I mean, China just wins based on absolute numbers, but actually the United States has a high percentage on science degrees, but much lower than I expected on engineering degrees. You look at markets like Taiwan or Singapore, it's actually super high on the engineering degrees awarded, but actually obviously Singapore is a city-state, it's tiny by size. But it's actually just the overall supply of people who have the technical capability to go create an app and launch it. For that, you actually need hubs. And Stanford obviously gets a lot of credit for actually being the supply of talent for Silicon Valley, but I think it's much more than just Stanford. There are 3 examples of new initiatives that I think will influence the supply of talent. One is Cornell Tech, which was part of Mayor Bloomberg's efforts to turn this decrepit old island in the middle of Manhattan into an amazing technology university. They'll be graduating 2,000 engineers per year in partnership with Cornell and Technion University in Israel. The second is actually one of my favorite projects in Europe. It's 42, because that's the answer to everything. It's a need-blind technical university. In France, if any of you have lived there, is fairly hierarchical. You need to go to the right high school to get to the right school to actually get to the right job. And the guy behind this is Xavier Niel, who is as anti-establishment as you can imagine. He made his money initially by actually having literally porn channels on the Minitel. And then he launched a telecom company, and he's worth, I think, $7 billion. He funded the school. The school is need blind. You apply. The top 100 people who take the logic exam get in. No questions asked what school you went to, what grades you got. It's simply, do you have the technical, intellectual capability to be a good hacker? And actually, every single class is taught in English, which is, if anybody's been to France, not very typical. And it's amazing. The campus itself is great. It's in the outsides of Paris. It'll graduate 1,000 hackers per year starting next year. And what I think is one of the least known but most amazing startup schools in the world is 8200 in Israel. 8200 is actually the signal intelligence regiment within the Israeli Defense Forces. It really is an experiment in social incubation of actually getting really smart people in the room with each other. It creates co-founders, it creates IP that they can actually take with them, it creates startups, it also creates a couple of marriages. I know 2 or 3 couples that met in 8200. And it's actually, if you talk about Startup Nation and about what makes it right in Israel, it's this high amount of intellect that's just funneled through this intense 2-year program where they're serving the armed forces while learning to code, and then they go on and flourish and become entrepreneurs with the backing of the Israeli government. So you need a lot more projects like these to actually have the scale of talent out there. So if you have the talent, then you need the role models. And I call this the mom test. Does your mom want you to be an entrepreneur? In China, absolutely. No, your mom wants you to be the next Jack Ma. In the Valley, or actually in the US, you could argue that your mom might want you to be the next Mark Zuckerberg. In Colombia, or actually even in Spain, your mom probably wants you to be a bank teller or a government official. That's a stable job. You'll get salary. You won't get kicked out. Until we have more and more of these role models, it really is not going to pass the mom test. And until your mom is the one encouraging you to go hack instead of doing your homework, it's not going to happen. Frustrating part about this slide is that I spent about 45 minutes trying to find more female founders on screens. And I'd found one who was a Spanx founder. And I had to go to Twitter to actually find the second one, which was Elizabeth, the founder of Thelanos. So forget actually even just role models. Talk about female role models in tech and science. Until we put them in the same covers as the men, we're still going to be actually pushing out, if you will, half of the population. Personal pet peeve. So you have role models, you have the talent, people want to be entrepreneurs. It's actually a career choice that's accepted by your peers, by your parents, and you have the great idea, you start building it. How do you actually go from idea to actually scaling it out? And I do think there's a role for accelerators and incubators and what I call launch platforms, for you to go from idea to actually having an MVP, having a tangible product that you can actually ship. And be that 500 who's actually reached out across the world to bring companies to the Valley into this tight incubation model and then launch them out to the world with co-founders, or Y Combinator, which obviously has had a pretty good track record, but also more local launch platforms. Seedcamp, who I would argue has been one of the key drivers of the startup ecosystem in Europe, because they go find the best startup in Slovenia and Lithuania and Latvia and Estonia, bring them all together, put them in touch with funders and mentors, and then let them flourish, be that in Europe or moving to the US. Or studios. We're actually personal investors in 2 studios. One is BetaWorks on the East Coast, the other one is Science on the West Coast. Companies that build companies. The most famous studio is Rocket Internet, and I do think they actually have a place in this world. They build companies. Some of them might actually not be original ideas, but they build great companies, and those companies go public, and those companies provide liquidity. And they happen to be a really good school for startup managers. They hire McKinsey or Goldman burnt-out bankers or consultants and teach them how to be operationally ruthless and launch a business. And here in Miami, Rocker Labs, that is a bit of a studio/incubator investing into startups as well. Tied to this, though, is actually the government incentives and support for what the entrepreneurs are trying to do. And depending on which country you go to, you actually have different tax regimes and incentives for people to go build businesses. The most famous one, at least in Europe, is Tekis in Finland, where the Finnish government actually matches dollar for dollar any investment that you put into a company. It's a grant, pretty free. You can kind of have to repay it down the road. But it means that every dollar that I put into a Finnish company is doubled, with very little implication and actually no impact on the cap table. In London, there's actually a program called EIS, in which if you invest into a company and that company goes amazingly well, it's capital gains free. If it bombs, you can write it off from taxes. Downside to that is you end up having a lot of bankers who put their bonus money into startups without A, understanding how to price it, or B, adding much value. But hey, it's cash. It helps. So the launch platforms do, I think, play an important role in how you scale out the ecosystems. So you have these different pieces and you're beginning to scale out. You need early stage funding. And early stage funding comes from angels or actually early stage VCs. And I think that's where we start having some problems in less developed ecosystems. So we did an analysis of seed, Series A and Series B investments in the US and Western Europe, just to look at the overall flow. So I mean, the ratio actually, if you look at Europe versus the US, it's not that bad. It's like 2,500 seed-funded companies in the last 5-year period versus almost 7,000 in the US. But the first problem actually is the Series A, where there's literally is not enough funds you could actually call to actually do your Series A. There's 35 Series A funds in the Valley. There might be a dozen in New York. There isn't a dozen across all of Europe. because you have much bigger funds, $400, $500 million funds, and then you quickly drop down to more like 30 million, 40 million local funds. So Series A crunch immediately takes you from 12% that graduate from seed to Series A in the US versus 6% in Europe. And then Series B, and the Atomico guys actually are very acute at this. Who do you actually call if you need a $20, $30 million check in Europe? There's literally 5 funds. Accel Index, Fidelity Growth, Highland, Atomico, and that's kind of it. Unless you actually go to the US and start talking to the US investors, in which case they probably want you to move to the Valley, which is a very different proposition. I mean, to be fair, Sequoia and Kleiner and a number of others are actually coming in and finding opportunities, but it's actually not the norm. So you end up with a funnel in which you have a Series A crunch in Europe, but also a dearth of actually true growth capital. At Series B, an average European company will have raised $5 million less than its US competitor, median. So it means you're undercapitalized, yet competing for the same user on that Android phone or iOS device. And if you look at it geographically, it's still massively concentrated in Europe, mainly in London. While seed fund rounds in Europe has gone up 8x, UK has consistently maintained 30%. The interesting one is actually Sweden, where the median investment for seed Series A and Series B in Sweden is actually higher than any other country in Europe. And if you ask them why, it comes down to returns. Actually, Nicholas from Atomico had this quote about Sweden has the highest returns per capita out of any country in Europe. And I argued whether Israel shouldn't have that. He had data to prove that Sweden had actually created more unicorns per capita than any country. And it's a fascinating place, right? The number of companies coming out of the ecosystem. So finally, you've hit it, the product's working great. Who do you turn to for that growth funding? And I think what's interesting in the growth funding space is the new type of people that are coming in to invest. I mean, Tiger has had a fantastic run actually investing in places where others don't go, as has Naspers, which, by the way, is a South African cable company that happened to invest into Tencent in 2003. I mean, how does a guy from South Africa end up in Beijing investing into them? Or actually Google Ventures, who has just created a fund in Europe, 130 million per year to invest across the region. But also these like multifamily offices, so Iconic's a multifamily office for a bunch of the billionaires in the Valley, or hedge funds actually coming into space. So growth funding in tech, as we heard about earlier, is completely mutating, and who you're actually looking to fund the business is changing. And then you get to the magic exit, right? You actually want to actually call it out. And I am using Atomico data because I love this graph. So I do work for my own fund, not for them. But they did this analysis of the number of unicorns across the world. And the interesting thing was that the vast majority of them were not in Silicon Valley. And if you look at the red line versus the blue line, the red line is unicorns outside of the Valley versus in the Valley. It's not only higher, it's actually growing faster. So Snapdeal in India, Shopify from Canada, Farfetch from Portugal/London, Alibaba from China, right? These companies are actually scaling out and growing and becoming valuable across the world, not only in the Valley. And I think the Valley is a magical place that has a history that's helped it to build up, but there is this massive opportunity outside. So how do we actually get to 1 billion in valuation? The green line is IPO, which is prevalent in the US. The red line is M&A. And the blue line, green line is private markets, and blue line is IPOs. So if you look at the IPOs growth in Europe, I think there's still an opportunity. No IPOs. Look at the lack of IPOs, if you will, in Asia compared to the other regions, and how that will change. It has begun to change as Alibaba and others start listing in the US. So you built the business, you scaled it, you've hit the product MVP, product market fit. Some hedge fund guy in New York has given you $20 million to go scale it. You're now worth $1 billion. Hooray, you've actually done it, right? What do you do now? I think that's the last part of the ecosystem, which is still lacking in a lot of these tech hubs, is the creation of these mafias. So the PayPal mafia that everybody talks about in the Valley, but I think all these other mafias that exist in different hubs of people who are not only role models, but also perhaps angel investors, mentors, advisors, or actually repeat entrepreneurs. So in Berlin, you can actually track a lot of the Berlin hype or success back to Jamba Jamster. They used to be an SMS ringtone company created by the Samwer brothers, but that actually led to a lot of the founders and angels in Berlin were employees at one point of Jamba Jamster. DoubleClick in New York, which you could argue, well, Kevin Ryan came out of that, but a number of the active angels in the New York ecosystem can trace their beginnings back to the first DoubleClick exit and then the second DoubleClick exit. Or in Latin America, where the remate has actually led to Alec Oxenford creating OLX, or Jose Marin actually becoming a fairly active angel. Do you need this ecosystem in which, A, there's liquidity down the cap table, and that's, I think, a big problem in Europe, Employee number 1,000 at King, which went public last year for $7 billion, probably did not do that well as compared to employee 1,000 at Google or at Facebook. The value of an option to an individual, I think, is still hard to explain because there's not enough liquidity events where you're willing to take a 20K pay cut to get 20K more in option value. And that takes time, and that takes a cultural shift. Tax implications as well about different countries and how that impacts it. So if we bring it back to Miami, and this is all hypothesis. I don't know if actually all these pieces are there yet. Do you have a supply of talent either already in Miami or actually being imported, right? If some rock star engineer is in New York, is he willing to move to Miami with his family with the risk that the company might actually fail? And what does he do actually next? If you think about culture and role models, so Demian, who's a fantastic guy who actually is building this global company from Miami, and he has global ambitions. But are there 100 of them? Are there 100 people that you can put on stage to actually say, you could be like us? Launch platform, so the lab, which is a great co-working initiative supported by a number of angels, or Rocker Labs, which I mentioned before, but are these actually of scale yet to actually provide that early stage funding? And where I don't know, and I think there's still a gap, is actually active early stage and later stage investors in the region, be that Miami-based funds or guys who literally get on the plane from New York and come down, or from other regions and come down. And I think that takes time. I mean, that literally until you actually have enough people that are willing to make the trip, because there's deal flow that actually makes it appealing, you might not have the momentum of the ecosystem, which leads more people to come in, and then more people to invest, and more growth stories, and more exits. And then finally, are there going to be exits in Miami? So everybody is talking about whether Open English is or is not going to IPO, whether Yellow Pepper is going to be the next payments platform for Latin America coming out of Miami, funded by a Belgian, by the way. So like, the fact that you have at least a couple of stories makes it interesting. But you need 10 more, 20 more. And you could take the same kind of stack and apply it to any country that we've talked about today, whether it's Mexico, whether it's Argentina, whether it's Brazil, whether it's Germany or France or Vietnam. I think you need to have all these components in like this pot to actually create that collision of ideas, founders, ecosystem, role models, funding, and then eventually exits to then get LP interested, angels to actually invest, new companies to be born from the person that actually was employee 1,000 at XYZ company. But I do go back to my initial slide that I believe that entrepreneurship is global. But I think for entrepreneurship to thrive, you need actually a full ecosystem to support the entrepreneurs. And I think Endeavor's going to speak later on. I think they're a fantastic platform helping entrepreneurs in less traditional hubs to scale out globally. Anyways, it's a pleasure being here today. Thanks for your time.